Okay, I wanted to make a video on how do we trade off these supply and demand zones. Do we just hop in automatically when a stock comes to the zone? Do we wait? Do we need confirmation? Could it be a set and forget type of play? Meaning, could we put an order out there already and we wait for it to execute? We put a buy order, we put a sell order, and we put a stop loss order. Could we trade that way? So in this video, I'm going to clarify, hopefully, a lot of the questions that I've been getting in the chat room on how do we trade based off these zones. So the first thing I want to mention is that you shouldn't just trade when a stock reaches the zone. So in this example right here, we have the S&P future. We have a nice 2-hour supply zone that we reached the following day, right? And as you guys can see, price entered this zone briefly and automatically rejected it. So we have some sort of confirmation there. We don't want to hop in a stock if it's in a demand or supply zone if it only reaches the box and it doesn't act as an important level. And what I mean by that is a lot of times these stocks or the futures, that whatever instrument you're trading, they come into the supply or demand zones, and sometimes they won't react as if they're a supply or demand zone. Now that's because if something reaches a zone, there could be more buyers than sellers, or there could be more sellers than buyers, depending on if you're talking about a supply or demand zone. So what I mean by that is if a stock, let's say in this case, the S&P comes up to the supply zone, right? But we have enough buy orders and the stock just shoots right past this supply zone. It continues to head up and up and up towards 30.50, right? That would cause that these unfilled orders sitting at this level aren't enough for them to take over. Meaning the buyers are taking over the sellers in this supply zone, obviously. But in this case, the supply zone worked and there was more sellers, there were more unfilled orders than there was buyers or buying orders at this moment. So we need to find confirmation. And what I mean by confirmation is you don't want to just hop in right away. So this is a 2-hour zone, right? You guys can see the formation right here. We have a nice basing candle. We draw it up to the wick and we follow it and we wait for price to reach that level sometime again in the future. And this happens to be the following day. So now I'm going to show you guys a little smaller time frame and what it looks like, right? So now we have the same 2-hour zone, obviously. And now we have one candle in there rejecting it, and then we have another small consolidation base candle here. This could have qualified easily for a supply zone, right? Even on the 2-hour chart, this could have qualified for another supply zone. So here we have an hour chart. We wait for price to reach this level and we could short it once we see this wick here. This wick is rejecting on an hourly chart, right? Or what you can do is go to even a smaller time frame and wait for a rejection. Now this is a 30-minute time frame. So now we rejected on this 30-minute candle. We came down, we consolidated, and boom, price falls, and it falls very hard. Matter of fact, you could even go down to a 15-minute time frame and see how we rejected the supply zone. So now we have 2 candles in the supply zone that rejected versus the 2-hour zone or even the 1-hour zone. So I'm going to go to the 15-minute chart again, right? So we reject. Then look how hard we rejected this one candle right here, right? We have a huge, almost engulfing red candle down, followed by consolidation, followed by another strong move to the downside. So what I'm trying to get in here is that you shouldn't just hop in, because I'm going to show you guys an example of why you shouldn't just hop in. I'm just telling you guys that right now. But you shouldn't just hop in once price reaches a supply or demand zone. You have to wait for confirmation. You have to wait for a rejection or a bounce off that level. And obviously we have a rejection. You guys see this strong candle sell off right here. And we have other supply zone formations in the supply zone, as you guys can see. So we need confirmation. We can't just blindly hop in to a play. And you guys are going to see why confirmation is important and why we shouldn't just buy or sell something because we're in a demand or a supply zone. So here's a good picture of Netflix and another 2-hour demand zone, right? So you guys could see why this 2-hour demand formed right here. So now we move this box over and we wait for price to re-enter that level. And in this case, it also happened to happen the following day. So if we were to use this 2-hour demand zone and look on a 2-hour time frame, we're just going to see one red candle straight down followed by another green candle up, right? I don't want to trade this 2-hour supply zone from a 2-hour chart. Even though I plotted it on a 2-hour chart, I don't want to make a trade. I don't want to enter the next day on a 2-hour chart because you're just going to see a bunch of mess, right? I want to go down into a smaller time frame, maybe an hourly, right? So if we were to look at this 2-hour demand zone and we were to look at, let me just draw something here. If we were to look at the first 2 candles, we don't know what happens here, right? We don't know what's happening right here. Would this look like it's going to bounce within the first 2 candles? Was there ever a bounce on Friday within the first 2 candles? No. This would look terrible if you didn't know what happened afterward, right? This doesn't look like the stock's going to bounce. This looks like the stock's going to completely avoid the demand zone and fall even further down, right? So I'm going to remove this now. And as you guys can see, yes, we did come below the demand zone, and this wouldn't have qualified for a solid supply demand trade, right? So that's why it's important for us to not hop in, let's say buy right here, right? And put our stop loss down here. We want to wait for something to maybe react or bounce off this level first, then enter, right? Then enter maybe somewhere here and put our stop loss at the lows. But obviously this came below the demand zone. So if you were to trade based off of the rules of only trading in a supply zone, this wouldn't qualify it. And this wouldn't be a trade I personally would take because it came out of this demand zone. But as you guys can see, you guys can trade around these zones because look what happened. A 1 hour demand formed right here. So now we have going into Monday and going into the weekend, we're going to have a demand zone that formed here. So now what I'll do is I'll wait for price to come in into this zone and then wait for a possible bounce for a move up, right? So we even go even smaller now and we have a 30-minute chart. So I'm going to, again, block everything out, act like we don't know what happens next. We don't know what happens next, right? So now we have this 2 hour demand zone. Look what happens. The first two candles are red, doesn't look good, but look, oh, we have a green candle and we have a basing green candle. Am I going to hop in this play long because maybe it looks like we're done selling off and this demand zone is going to be a valid zone? No, I'm not going to hop in, right? Just because we have a green candle here doesn't mean I'm going to hop in. You need confirmation. Look what happens if you got in at this green candle right here, right? And put your stop loss below the box. Look what would have happened. You would have got stopped out, right? You want to wait for confirmation. And what I mean by this is you want to look for maybe a candlestick formation or a demand or a supply zone forming, or you want to look for higher highs. So if we saw a candle, right, and we closed up here, this doesn't exist down here. We closed up and look, we can maybe start forming an uptrend, right? So you want to look for confirmation, maybe a higher high for a demand or a lower low for supply. And I'm going to show you guys that in a minute. But I just want to stress the point that you need that confirmation. You can't just hop in because we're in that zone, right? So you want to look at different time frames. You want to look for confirmation. What's going to serve as confirmation? Higher highs, lower lows if you're talking about supply, or long wicks. Once you have a long wick, that means buyers or sellers are stepping in, and that'll help confirm price. But you just want to make sure you have that higher high, lower low, longer wick. Or you could use a technical pattern or a candlestick pattern, such as a double top or a double bottom, right? So what I mean by looking at different time frames is if you're trading a 2 hour supply zone, don't look at a 4 hour zone or a 4 hour chart and see if it's making higher highs or lower lows. Why would it make sense if you're looking at a 2 hour zone to look at a 4 hour zone for confirmation, right? Or if you're looking, let's say, at a 15-minute demand, don't look at the hourly chart to confirm if you're bouncing or not. If you're looking at a 15-minute demand, you want to look at either a 15-minute candle chart or you want to look at maybe something like a 5-minute candle chart to get confirmation, to get those higher highs or lower lows. You don't want to look for, if you're looking at a 15-minute demand bounce, you don't want to look at an hourly chart to confirm making higher highs because then you're just going to get in the play too late and the move that you're expecting might have already happened and you're going to miss out on a good portion of profits. So the rule is for larger time frames, you want to move down into smaller time frames to confirm. Now, you don't want to go too crazy. You don't want to be looking at a daily chart and do a confirmation on a 15-minute chart, right? You don't want to be looking at a 4 hour chart and look at a 1 minute for confirmation. You don't want that. You want to use something that looks like it's going to potentially bounce. And how you can tell by that is higher highs. Or if you want to look at something rejecting supply, you want to look for lower lows. That will give you confirmation. Once you get that lower low or the higher high, you could enter a call or a put and then put your stop loss above or below. Right? It's very simple, but I don't want you guys getting in too early. That's what I've seen a lot of you guys do is you get in just because stock is in a zone. That's not the proper way to trade. You want to see that zone confirm. You want to see that zone act as an important key level, as an important supply or demand level. So here's Tesla and here's a 1 hour demand zone. So you guys can see we make a nice move up. We base out right here. Then we follow by another rally to the upside. So this is a demand zone. We draw from the top of the body to the bottom of the wick, and we follow and we wait to enter until price reaches that level again, and we're in demand, so we want price to bounce. We want to see that higher high. So if we were to trade off the hourly zone, this is what I mean. You might get in too late, right? So if we were to confirm off higher highs, we would get in somewhere right here with our stop loss either at the lows or a stop loss at the bottom of the zone, depending on your risk tolerance. Now, this is going to be different for everybody because everybody can risk more. Everybody's going to be able to risk a different amount of money than somebody else. So it's going to be different for everyone's risk tolerance. Some might have a stop right here. Some might have a stop at the bottom of the box. And hey, some might have a stop over here at this other demand zone, right? So if we were to get in and follow this hourly chart, we would get in over here. It would be a late entry and we're missing out on this portion of the move right here, right? You guys following along with that? So this is what I mean by going into a smaller time frame. And you want to wait for price to bounce. You want to wait for the higher high, and you want to wait for price to react off that zone. We're only going to get a strong move up if we react off this demand zone. So if we were to look at this again without seeing the future, we would see prices downtrending, right? So that's reason number one to not hop in calls. But some of you are like, we're in demand. I'm going to hop in calls because it's known to bounce here. That's totally okay, but I want to wait for confirmation. That's just the way I trade. So this doesn't look good for a bounce here. This doesn't look good for a long position. This doesn't look good to buy calls down here, right? But if you were to go to a smaller time frame, let's say a 30-minute chart, look what happens. We come down, right? But look, we're basing out right here, right? So we could have another demand here. And we get a nice bounce, a higher high, and we make a nice strong move to the upside, right? This is on a 30-minute chart compared to a 1-hour demand zone. Now we could go even smaller, let's say, to a 15-minute chart on a 1-hour demand zone. And look what happens, right? We're coming down still, but look, it looks like we're basing out, right? We're starting to get flatter and flatter and flatter, even though we're in a downtrend. This is where the orders are getting filled, right? This is where institutions could possibly even be leveraging in for another position. But all these unfilled orders from back here are getting filled. And look what happens. We make the higher high. Now, if you go to this 15-minute chart, right, you're going to see things differently than what you do on the hourly chart. So now your entry is going to be even lower than where you would have been if you were looking on an hourly chart. We're even lower, which means our reward's going to be higher and our risk is going to be lower, which is something that everybody should be looking for. Lower risk and higher reward, right? So that's why it's important to look at those smaller time frames. And you could go even smaller now to a 5-minute, and look what happens. We're going down, right? But we're basing down even though we're going down. And this is what I mean by a technical pattern, right? We have a bottom here followed by another double bottom. So we technically double bottomed here, right? Remember what I said in the beginner's course is that we don't need to come down to the exact price to double bottom. All we need to do is come to the body of that first bottom. And as you guys can see, we easily came down and double bottomed here, right? So that's even another confirmation. You could enter maybe somewhere over here, put your stop loss down here from this low or possibly this low, depending on your risk tolerance. So here's a crude oil trade, right? We have a weekly. So now we're even longer term. This is a weekly supply. And as you guys can see, right here's the basing period. All the way we wait for price to come. And look what happens. We reject this weekly supply. And now I'm looking at a daily chart here right now. So I'm not going to look at a 15-minute chart if we have a weekly demand zone or a weekly supply zone, excuse me. So this is a weekly supply. Would it make sense to look at a 5-minute chart or a 15-minute chart for confirmation? No. Here's the same zone, just zoomed into an intraday look. We have a Monday, a Tuesday, a Wednesday, a Thursday, right? If I look at a 15-minute chart, I don't see no rejection off this level. I wouldn't think this is a strong supply level, right? Look, we come straight up this day. It looks bullish this day, even though we're in supply, right? But I'm looking at a weekly supply, so I don't want to be looking at this smaller time frame. I want to go on something a little smaller than that weekly, maybe a daily chart, right? So if we were to go on the daily, look what happens. We have this day that I showed you before, which rallies up, right? So this green candle there is the day that we rallied, which would be this day. We're in supply. It doesn't look like it's going to be a good short position, does it? No. But if we were to look at the daily, here it does, right? Look at the next day. We have a nice inside candle, a nice even smaller day, smaller of a range day, and then followed by a break of this lower low. And look what happens to price. We come down $4 within the next maybe week and a half, right? So this is why you want to follow confirmation. If I was to be looking at this 15-minute chart or even a 30-minute chart, I would not want to short this, right? It's safe to say that, right? But if we were looking at this daily chart, I'd want to short this day right here, right? This day right here, this supply zone confirms, and it's going to be a valid trade. So you just want to have that confirmation, as I've said. You need the confirmation. You guys can enter blindly when it reaches this zone, but it's not something I personally do, and it's not something I suggest. I know people that do get into the zone, right, and put their stop loss at the end of the zone. And as you guys can see, this zone would have worked. I mean, it just all depends on your risk tolerance. This zone would have worked, right? Let's go back. If you were to place an order, let's say on this 1 hour demand, first time we touch the demand, you get in a position, you put your stop. Let me just erase this right here. So we have this 1 hour demand. First time we enter this demand again, you get your entry right here, right? Let's say you had an order just sitting out there when Tesla reaches this 234.50 level. We had an order sitting there, we automatically get filled. Our stop loss is just sitting here. This trade would have worked if maybe we had a sell order right there and our stop loss down here. this trade would have worked, this trade would have been valid. It's not something I do. It's something I do plan on doing in the future. I just need to tweak some things with this strategy for my personal trading. But if you were to put an order at the start of the box, put your stop loss at the bottom, and have a sell order somewhere to take profit, this trade would have worked. And a majority of the trades would have worked, right? Netflix obviously would have been a loser because entry would have been here, stop loss, we would have got stopped out, and automatically right after we get stopped out, look what happens to price, it comes back up, right? So this would have worked here as well on this ES 2-hour supply. You could have got an entry here, stop loss here, and maybe take profit somewhere in this area, right? I just like actively monitoring the zones. I like seeing a rejection. I like seeing the bounce. It just helps me with my confirmation. So if you guys have any questions about this, feel free to message me in the chat room. I will be here for you guys.